Good afternoon, ladies and gentlemen. I am Jimmy James. You're watching Commodity Confidential. Just before we get started, a quick disclaimer. Pause for a better view if you need to. Right, I want to talk about something a lot of people assuming right now. If the United States goes to war with Iran, everyone seems to think gold and silver automatically explode higher. But I'm not so sure it's that simple. In fact, I think we could see a sell-off first, and I'll explain why. Apologies, I can't shake this cold off. Because markets don't trade on emotion. They trade on liquidity, they trade on positioning, and they trade on who is forced to sell. Let's start with the headline reaction. If the United States entered direct conflict with Iran, the first market moves would likely be oil spikes hard. The US dollar probably rallies, equities sell off sharply, and volatility explodes. Now, most people assume gold and silver just rocket higher immediately. And yes, they might spike at first. We could be seeing that now, actually. But here's the part people forget. In a real shock event, funds raise cash. They meet margin calls. They reduce leverage. They sell what they can sell, not what they want to sell. And gold is liquid. Silver is liquid. That makes them easy to sell. Remember March 2020? Everything dropped. Even gold fell hard before it rallied. And silver fell even more to about $10 per ounce. Because in the first phase of panic, it's not about safety, it's about liquidity. So let's run through three scenarios. First, the first 24 hours, oil spikes aggressively. The dollar strengthens and stocks drop. Gold could spike initially on fear. If the dollar surges strong and funds need cash, we could see gold fade. Silver could drop even harder because it's smaller and more volatile. Short term, a sell the news move is completely possible. Secondly, the first week. This is where positioning matters. If traders bought the rumour for weeks beforehand, the actual event can trigger profit taking. If oil stays elevated and inflation expectations rise, gold starts to stabilise. If the conflict looks contained, then metals could struggle. If it looks like escalation and disruption to shipping or energy supply, gold begins building a stronger bid. Silver often lags here. It doesn't lead. It follows, once the inflation story sticks. And thirdly, the 3-month macro picture. This is where things shift. If war leads to higher oil, higher inflation, more government spending, more debt issuance, potential pressure on real yields, then the macro backdrop becomes supportive for gold. And once gold establishes strength, silver typically outperforms, later in the cycle. Silver is way more explosive, but usually moves second. And there's also the US dollar factor. If the US dollar surges as a safe haven, metals can struggle short term. If confidence in US stability weakens or deficits expand meaningfully, gold benefits more clearly. So it's not quite as simple as war equals higher gold. Sometimes war equals higher gold first. And that changes everything. So I'm not saying metals won't go higher. No, I'm saying the path might not be straight up. Short-term liquidation is very possible. Medium-term strength is very possible, but the first move might not be what social media expects. Markets punish consensus thinking, if everybody gets on the one side of the trade. If you're trading silver futures, watch the dollar index, oil sustainability, real yields, and positioning. Headlines create volatility, but liquidity determines direction. So let me know in the comments, do you think metals spike immediately and continue, as it looks like we're seeing? Or do we see a shakeout first, like we saw in 2020? Because if this scenario unfolds like it looks like it's going to, well, the first reaction could be the wrong reaction. And that's where opportunity sits. And one more thing to bear in mind. Copper mined inventory is rising. Not particularly because mining volumes have increased, but because there is currently a lack of demand. If mining volumes get reduced due to a lack of demand, that could put pressure on silver availability, because silver is produced mainly, as we know, as a byproduct. And if mining volumes fall, even temporarily, we could see far more aggressive upside move than most are positioned for. So the question for today is, how does silver react to war news? We've also got to take into account options expiry today, so could be a little bit of an anomaly for a few hours. But does silver spike, as we're seeing, then sell off hard as war breaks out before going to new highs and settling in a trading range that most silver investors could only dream of? Or can silver continue this upward move without any pullback? If it's going to do that, it needs to ignore, if that scenario does play out, it's going to need to ignore a rising US dollar. It'll need to ignore a sharp sell-off in equities. And remember, the first 24 hours when war starts and we are off to the races, oil likely spikes aggressively if the Strait of Hormuz gets disrupted. The dollar strengthens, making commodities more expensive. Stocks drop as hedge funds move to cash, and they will liquidate what they can for the best profit. And where liquidity is high, well, I've just described silver, I've just described gold. They will more than likely sell it on the news and buy back at a much cheaper price, just as they did in 2020. Remember this: buy the rumour, sell the news. That's not manipulation, that's positioning. Institutions move first, retail reacts later. Just bear that in mind. So I said yesterday, and I'm still doing it now, I'm shorting into this strength. Nothing extreme, just positioning for a potential pullback before a larger move higher. The only question in my mind is not if we pull back, it's how sharp and how deep will that pullback be. Watch the dollar, watch oil, and watch liquidity. Because the first move in a war headline environment is often the wrong move. I am Jimmy James. You've been watching Commodity Confidential. If you enjoyed this video, please give me a thumbs up and I'll see you real soon. Stay safe.